The Australian Financial Review.
Hello, I'm James Thomson, Chanticleer columnist at the AFR. Welcome to our weekly news breakdown of all things business, finance and markets. With me today, as always, is senior Chanticleer columnist at the AFR, Tony Boyd. Hello, Tony. How are you?
G'day, James. Yeah, I'm really well.
Fantastic. And today I'm also thrilled to welcome the newest addition to the Chanticleer team, Anthony Macdonald, who makes his debut on the Chanticleer podcast today. Anthony, how are you going?
Yeah, great. Thanks, James. It's super to be on the podcast and I hope I can bring something to the discussion.
Absolutely. Sure you will. Now, this week we're going to take a look at the big 5 themes that emerged from the AFR's Business Summit. We'll look ahead to the data that's going to set the tone for global markets this week, and we'll reveal our recommendations for what to read and watch to get your investing career up and running. But first, Anthony, this week we had the return of an event that's become a little bit rarer this year, an actual deal. Private equity firm TPG swooped on a big stake in ASX-listed funeral home operator InvoCare and then launched a full takeover bid a few hours later. Anthony, this was a good old-fashioned share market raid, and we haven't seen one of those for a while. How did TPG pull this off?
Yeah, well, James, we have a cliche in Street Talk that we get to bring out about twice a year, that nothing lights up the market like an aftermarket raid. And this one was a cracker. TPG had been running its checks on InvoCare for 12 months, but it wanted to see InvoCare's full-year results at the end of February to make sure that what it was seeing from the outside matched up with what had been going on inside. InvoCare's results were soft and investors walked away with concerns it might be losing market share, which is the sort of thing that would lead to a big sort of re-rate in its share price, send the shares down. So InvoCare shares dropped 10% on results day, and that opened the window for TPG to pounce. Now, TPG could have pounced straight away, but it must have thought that as InvoCare management went out and saw their investors and told the story, that investors would like the story even less. And that's kind of what happened. So InvoCare's shares fell for 5 days in a row. And then come Monday night this week, TPG had UBS's equities desk offering $12.65 a share, which was a 41% premium to try and get a 10% stake. And the rate ended up being a walkover. TPG's now got 19.9%. It's made a bid for the company. It's put them in play. It's already put $350 million down. So it looks like it's heavily committed to the takeover. And it's just a matter of what InvoCare does next.
Right. So what do you think InvoCare will do next? I mean, as you say, the stock's been a bit of a disappointment lately. Clearly, there's plenty of investors who are more than happy to sell out into TPG's bid. Dare I say, is it last rites for InvoCare, or will they look to push TPG to bid a little bit higher?
Well, they've got to at least ask. So I'm sure they'll ask TPG to go a bit higher, but at the end of the day, TPG's done the damage now. It's picked up 20% of the shares. InvoCare right now doesn't even know which of its shareholders are still there and which ones aren't. Right. It's got to wait a few days for it all to sort of the dust to settle.
Well, it's good to have a deal back on the table, and we'll watch how this one develops over the next few weeks. Tony, we saw a bit of action on the tech front this week too. Local champion Atlassian and the Australian-New Zealand cloud software business Xero joined the global tech layoff trend. I think there's been 140,000 odd tech jobs cut around the world so far this year. Atlassian cut 500 jobs at the start of the week, and then Xero joined in, cutting up to 800 jobs on Thursday. Now, Xero said it wanted to balance growth and profitability. Is this another sign the froth's gone out of tech?
Definitely, James. The companies that are in tech that aren't making money are realising they have to. Now, both Atlassian and Xero are losing money, and this job cutting was intended to sort of change the narrative and get the stocks back in the eyes of investors. The Atlassian strategy didn't work. I don't think they've cut enough jobs, or they've actually got to do more. And interesting, my contact with the company recently was over generative AI. Why aren't they using it? Now, the company didn't want to go on the record, But I would suggest their strategy for getting back to profitability is probably going to involve using something like ChatGPT, which can be used to write code. And let's see what happens. But I understand Atlassian doesn't deploy generative AI, but they're looking into it. So perhaps that's the way to get a bit of a fire under their share price.
Yeah. Anthony, we've seen a real re-rating of tech in the last 12 months. Is this going to be par for the course, these job cuts, belt tightening, sort of realigning, restructuring these businesses as the tech companies try to win back favour by, as Tony said, making themselves look a bit more focused on the bottom line?
Yeah, absolutely. I mean, investors were calling for it about 6 months ago. They made it, very clear the pendulum turn that, all of a sudden they were focused on free cash flow, earnings, real sort of old world investing metrics. And the tech companies had to listen. I mean, it's anyone that's working inside a tech company, they've got a lot of money at stake in their own company shares. And if they want to make money, then they have to listen to the market.
And can I just jump in there, James, and say that Xero, now, full disclosure, it's in the Chook Super Fund. And I'm down about 20% on that one. But look, the point I was going to make is that after they made their announcement, Goldman Sachs basically upgraded the earnings by 17% for 2024. Now, they were already ahead of consensus because they have a buy on the stock. So if you compare where they're saying the earnings will be now compared to before, it's at least 36% higher than consensus. The point being, by cutting costs, aiming for profit, they've suddenly got a PE multiple that's so much higher. And so that explains why the stock's up about 15% this week. So there's some real tangible results from this. It's not good for those people who lost their jobs, but I think this is another case of shareholders are suddenly become paramount.
Yeah, and I listened to the analyst call that Xero did after this announcement, and one of the analysts did point out that losing 700 to 800 jobs will take Xero's workforce back to where it was in September 2021. So really, they're taking out the froth of the last couple of years, but they're leaving really the bulk of their workforce intact. So let's see if any more local tech players go down this path. Let's jump on to our first topic, and we always like to think that here at the AFR we're the centre of the world. Not always true, but I think we really were that this week with the AFR Business Summit, which was held in Sydney on Tuesday and Wednesday. It was a fantastic event. We had the Prime Minister, the Treasurer, the Opposition Leader, all of whom took time out of a sitting parliamentary week. And then we had business leaders, the CEO of BHP, Mike Henry, Fortescue's Andrew Forrest, Macquarie's Shamara Wickranamayka, Commonwealth Bank's Matt Common, Telstra's Vicky Brady, Woolies boss Brad Banducci, all up on stage, all giving some really thoughtful discussions about everything that's going on in Australia and around the world. So what we thought we'd do today is something a bit different and break down the 5 big themes from the event for you and really spend a bit of time digging into this. And I think we've got to start on day 2, actually, which was the moment that really captured the attention of financial markets here and abroad. And that was when RBA Governor Phil Lowe fronted up to explain his decision to lift rates the day before by 0.25% to 3.6%, and then took some curly questions on this. Anthony, how do you reckon he went, Phil? It was actually quite a human performance, wasn't it? He sort of fessed up to some mistakes and laughed at himself, and it's a serious business, but he did show a bit of emotion and character, I guess.
Yeah, very much so, James. The Q&A was just magnificent theatre. I mean, here's a guy under extreme public and political pressure whose every word and gesture is being analysed to within an inch of its life. I mean, he fronts up, takes questions the morning after his 10th straight rate rise. It would have been easy for the governor just to do his presentation, which was, pretty dry and what you'd expect, and then just backdoor it out of there. But instead, he listened to the questions from the media. He answered them pretty thoughtfully and respectfully. He seemed poised and thoughtful, which, we expect him to be in that job, and showed a bit of self-awareness and humility, even volunteering, not through gritted teeth, that the RBA could have communicated better recently. But it was just compelling viewing. It was like a wind back to the Banking Royal Commission a few years ago or the Crown inquiries. just seeing someone front up like that, and obviously facing the market and the media is a big part of his job. But this is a guy who's got reporters trawling through his mortgage details from 1997. They're questioning his meeting schedule. They're papping him out the front of his house. Like how many other panelists in the CEO set would have been happy to sort of front up and take questions like that? I thought I was absolutely glued to it. And but if you stood back from the theatre for a second, I thought the main takeaway for me was Lowe saying that if the RBA can get inflation back to 3%, which is the top of its mandated range, and keep unemployment in the low fives by mid-2025, it'll be a great outcome.
Yeah, that's actually a really good point, Anthony. It is a narrow path to get there. It won't be easy. It'll probably be bumpy, but he has set the goal there. And, 2 years is a long time in politics and a long time in the economy. But I guess in the span of interest rate cycles, it's not that long. And he did show a bit of confidence that he could get there. Tony Boyd, it was your son, Ed Boyd, who works for Sky News, who asked the question of the day, I thought. Ed asked Phil Lowe whether he's flipped from being a hawk in February to a dove in March by suggesting a rate pause could be on the cards. And Phil Lowe had a pretty good response, Tony.
Yes, he did. He said, well, I can't, and I didn't. It's got a lot of laughs in the room. There's a little bit of a background story to that. I think Ed has asked the governor some tough questions over the last 6 months. They've sort of had a bit of a sparring in public venues, but his answer beyond that was very good. Basically the same message he delivered throughout our conference. Inflation is too high and they've got to keep raising rates. But I think this idea of a pause must be good for all those mortgage holders who are thinking, wow, how high are these rates going to go?
Yeah.
One of the big themes, of course, that came out was, how bad will our recession be? And nobody thought that it would be as bad as 91 when home loan interest rates got to 17, 18%. So we're in a very different world, and that's a good thing. And just enough interest rate rises to get inflation down, and then we can go back to more normal sort of financial market conditions.
My only concern, Tony, I thought Phil was trying to give us all a bit of hope with this talk of a pause. I've heard similar things from the Federal Reserve Chairman Jerome Powell. He was talking a pause a couple of months ago, only to see inflation sort of roar back. I just worry if it's famous sort of last words for Phil, but we'll see. It was compelling theatre, and as Anthony says, good on him for fronting up and taking questions and meeting the moment. The second theme was the energy transition, and this thread ran through the whole summit. And particularly everyone's talking in business and in politics and regulators, everyone's talking about the US government's Inflation Reduction Act, which is a pretty silly name for a bunch of subsidies, about $600 billion worth of subsidies for clean energy developments. Tony, the IRA, as it's called, was a persistent theme through the conference. It's casting a massive shadow, even in Australia, where it's changing investment decisions already.
Well, the reason it's so significant, James, is because these subsidies are just so dramatic. And I think it was Andrew Forrest who really put it in perspective when he said a $2 billion green hydrogen project in Australia would only cost $1 billion in America. Yeah. And the Americans will subsidise each kilogram, is it, of hydrogen? Yes, by $3.
It is,
which is pretty phenomenal. And you're seeing it in the headlines all around the world. I saw a story in the FT that VW was considering a $10 billion battery plant in Europe, and it will now probably do it in America because it'll cost half the amount that it would in Europe, which is pretty dramatic. But it all started with Mike Henry, who BHP was the sponsor of the summit, and his first speech in the opening, apart from constantly sort of giving compliments to the Prime Minister who was sitting just in front of him, he said, we have to really respond. The Americans, not just them, the Canadians as well, have put in place a Critical Minerals Act. And the question is, what can we do about it?
What do we do? Yeah. Anthony, I thought the other part of the energy puzzle that really came through for me was the dawning reality, I think, for business and politicians of how hard this transition is going to be. We've got a legislated emissions reduction target now, but my goodness, the logistical effort, the capital required to get this transition done and done with the urgency that we need it to be done with, man, that's going to be tough.
Oh, it's going to be extremely tough, and no one in that room thought anything different. But the penny seems to have dropped that it's time to put some of this talk into action, and at least by having the emissions reduction target, that the action can kind of stem from that, with fresh capital coming into the sector and from those players that want to be involved in funding the transition. If you listen to Mike Henry or Andrew Forrest, that everything's accelerating extremely quickly globally. They're calling on Australia to not miss out because the governments globally are chasing for capital, and the capital is very portable. There's going to be plenty to play out here in Australia. Just look at a corporate level. You've got Brookfield coming for Origin Energy's markets business, which is a really brave move. But all the other legacy generation companies as well, AGL, Energy Australia, Alinta, they've all got their bankers out at the moment looking for capital and looking for parties to come in and help them transition. So it's going to be a huge couple of years.
Yeah, we'll be talking about this at every summit, I think, for as long as we're around. The third big trend I thought we should look at is politics. As we said, both the PM and the opposition leader were there across the 2 days. And Tony, I was struck by the different attitudes from both leaders. Anthony Albanese was very sort of conciliatory, basically telling the business audience, we want to work with you, we need you, and we love you even when you make big profits. But Peter Dutton seemed a bit grumpy with big business, suggesting they're sort of what they say in private to him and what they say in public is very different. And basically they're taking a small target approach in public because they fear getting whacked on social media by the woke of the left. It was a bit of a spray, really. Are the traditional roles of the parties being reversed a bit here, Tony?
Yes, there's something weird going on here, James. I mean, I don't believe him that there's some separate private conversations that are totally different to the public ones, because we know that every major business in Australia has been putting a price on carbon because they have to do carbon reporting of their own operations. And this safeguard mechanism, which is legislation that's due to go through the Parliament, that will make it much more obvious who are the biggest polluters and the responses they have to make.
Yep.
And Phil Curry, our political editor, put him on the spot and said, well, Mr. Dutton, I've gone all around the big business leaders here and they're all agreeing with the safeguard mechanism and you aren't. Are you out of touch? And that's when he went into this whole thing about, they're telling me different things in private. So I'd love to know who those companies are. I mean, the major emitters have to cut their emissions by about 5% a year between now and 2030. And that's just the reality of the energy transition. Yeah. So it struck me also very interesting that Peter Dutton is not appearing at the launch of the Liberal Party's campaign for victory in New South Wales. Does that suggest that maybe voters are a bit wary of him?
Maybe. Anthony, you were at the special summit dinner on Tuesday night, which was co-hosted by the Business Council. Jim Chalmers spoke and talked about how he had sort of three things to focus on: the energy transition, the care economy, so aged care and health generally, and digitisation. I guess there was a bit of concern in the room that perhaps the Treasurer and the government aren't quite being ambitious enough here. Would you agree?
Oh, there's clearly some friction there. The BCA president, Tim Reid, was pretty clear on that. And then he threw around the room to some other CEOs, some big names, from Telstra, Cochlear, and the like. And they sort of talked us through their industry and where they were sort of seeking some sort of government involvement or assistance might be the wrong word. But I mean, even at the summit, I mean, those sort of themes came through as well. I thought BHP went pretty well prepared to the summit, and its president for Australia, Geraldine Slattery, I mean, she was talking about the pause on growth capital at BHP up in Queensland because of those Queensland royalties step up, and the concerns about multi-employer bargaining. And then, Vicky Brady was very big on the whole certainty line and how you need certainty for long-term decisions. So, I mean, at the end of the day, it all just comes down to trust. And I think we still have to ask, how much does business trust the government?
Yeah, no, good question. I think we're still working that out. Theme 4, a quick one, Tony, the state of the consumer. We heard a bit from Matt Common, a bit from Vicky Brady, Brad Banducci. I came away from this pretty encouraged that they all seem to say, yes, there's clearly cost of living pressures, but consumers are hanging on pretty well, at least for now.
Yeah, I thought the message from Brad Banducci was very good, that consumers are very disciplined about managing their budgets these days. He talked about how, one of the reasons they're the biggest e-commerce company in Australia is because of home delivery of groceries. And he talked about how home delivery allows you to avoid the temptation of walking past that, the ice cream section in the cold part of the supermarket and not actually buying that expensive stuff. But the major thing I took away from him was that food inflation has turned. It's peaked. It's coming off. Yeah. And he even mentioned broccoli, a great dish, with sort of pine nuts and anyway, I won't go into that too deeply, but I think, there was a really positive message from that perhaps Philip Lowe his strategy of raising interest rates is working. Yeah,
well, Anthony, while Tony's chewing on the broccoli with the pine nuts at home, Matt Common was saying the pubs and hospitality venues are absolutely booming.
Yeah, he pointed out that he'd been talking to one of his clients who'd one in the hospitality sector, a big player that had been paying back its debt early because they were so confident that the outlook was pretty rosy. So, that was a sort of a great little bit of insight, I thought.
Yeah, absolutely. All right, the fifth trend is Professor Nouriel Roubini joined us from New York. And he's known as Dr. Doom. He's sort of a really bearish economist, used to be an advisor to Bill Clinton. I think he hams it up a bit sometimes. And Anthony, I'm not sure that if you heard his call that the human species may be rendered obsolete by artificial intelligence, surely you can't replace the magic of the Chanticleer team with a robot or AI, you wouldn't think?
I wasn't worried about my job. I was worried about my life after his session. I was just glad the sun rose on Wednesday morning. His presentation was up early and it sort of lingered over the summit. And Dr. Doom did not disappoint. He did a really nice job of pointing out how much things had changed in the economy. Like worries about inflation being too low is now inflation too high, and interest rates too low is now interest rates too high. But his big stuff, the stuff that really lingered, was just when he said the future of the planet was in question. Because the planet could be destroyed by war amongst nations, a nuclear winter, severe climate change, a more severe pandemic, or, like you said, eventually AI making our species obsolete.
Don't worry, whatever happens, the Chanticleer podcast will continue to come out. Tony, it was pretty theatrical, but I reckon there was a little bit of good stuff, and he sort of warned of 5 wars: decarbonisation, deglobalisation, inequality, automation, and then defence, so actual hot and cold wars. And you can sum up how you think that's going to, how likely those things are. But his point was that all of these things will mean government spending needs to go up, and governments are already creaking under huge debts, and extra spending is going to push up inflation. So he thinks inflation's not going back to 2%. It's going to be structurally higher for longer. Were you convinced by that argument?
He certainly put some very convincing arguments, James. And in fact, I suppose one of the big other themes to come out of our summit was about the purchase of the submarines from the United States and Britain to give Australia a greater defence capability, a huge capital investment, a massive job reskilling program. I'm not sure we've actually even thought about how many new naval officers there have to be, but when I sort of thought about it, I thought, you know what, you could actually go away from listening to him and think, I'm not going to do anything. I'm going to put my money under my bed. And to be honest, that's been a terrible mistake by a lot of investors over the years. I think you've got to be in the market and take what comes, but if you're not there, you're never going to get the compounding growth of your assets. The second thing, I sort of looked up, one of my favourite strategists is Victor Schvetz from Macquarie, and I thought, well, is any of what he's saying actually showing up in markets? And here's just 3 examples of where there's nothing happening. US leveraged loans market continues to function as normal, and the market itself has withstood not only the destruction of US $2 trillion of digital assets, including some Bitcoin miners, but also US households have lost about $7 trillion of wealth, and yet the economy in America is resilient. You look at emerging markets, corporate high yield spreads remain below 6%. Versus average levels of closer to 8 to 9%. So, in other words, the emerging markets of the world, which tend to be the most fragile, are successfully navigating their way through the biggest US dollar depreciation we've had for a long time. So, I sort of think that we need to balance whatever Professor Rubini says with what's actually happening in the world.
Take that, Dr. Doom. We've got Dr. Boom here making us feel a lot better about things. All right, this is a question. I'm going to ask you to look into your crystal balls. In 2020, when our business summit was held, the world went into pandemic lockdown a week later. In 2022, it was held just after the Russia invaded Ukraine. That makes 2024 a big year. What is going to be the big event that our summit is held in the shadow of? Tony.
This is a really tough question. I don't want to be on the doom and gloom page, so I'm going to say that central banks will be cutting interest rates. Financial markets will be looking forward to a much better economy, and we're going to go back into a new bull market. Now, how that manifests itself at the conference, it'll probably be in the choice of people we have speaking to the audience. Maybe it won't be Professor Rubini. It'll be a long-term value investor like, let's see, John Sevior's retired, but, there's plenty of other really top-quality fund managers who could tell us where to put our money.
Okay, Anthony, what's your big prediction?
I'd have to be some sort of sovereign debt crisis, wouldn't it? Or maybe Professor Rubini's just a bit fresh in my head. I can't believe we've just retrawled through those dark times together.
All right, well, I'm going to have 2 guesses. I reckon Michelle Obama is going to make her run for the announce her run for the US presidency early in 2024 and challenge Donald Trump. And then the other one might be, I hate to say it, Dr. Doom style, but China looming over Taiwan. So there's our predictions. We'll check back in 12 months and pretend we never said them, unless they were right, of course, in which case we'll remind you. All right, let's get to the break. We're going to come back and look at the big data that's going to swing markets next week. Back with you soon. Okay, well, gentlemen, we've got a couple of very important data points which are going to come out in the next week. On Friday night, we get US jobs data. The whole week has been dominated by talk of where Jerome Powell is going to take rates. He really needs a weak jobs report here, Tony, and he needs to see unemployment start to rise, so he's got some confidence inflation can start to come down.
Yes, but look, I don't think there's going to be much joy in these labour numbers because the excess demand is near its peak. Unit labour costs are very high, and the people who are quitting jobs continue to get higher pay rises. So there is actually in America tremendous still animal spirits, I suppose. So that could not augur well for financial markets.
And Tony, we've got a book launch this week. Joseph Healy, the co-founder of Judo Banker, a business banker, he's launching a book called Black Belt, I think. It should be interesting.
Yeah, look, I've known Joseph for a long time, ever since he was at National Australia Bank, and him and his co-founder David Hornery have written a book that's really trying to help people reduce the risk of startup failures. Interesting, I exchanged an email with Joseph on Friday, and he told me that there's no other startup bank anywhere in the world that has achieved the profitability that Judo Bank has in such a short time. They made $53 million before tax in the half year. Pretty good reason to actually probably grab the book, because these guys know what they're talking about. They've actually created a very successful financial institution.
Yeah, a successful startup with some advice about other successful startups. Anthony, in your world, we've got a really big one. The Origin Energy bid is almost there.
That's right. We think that Brookfield and EIG are finally just about ready to go on their bid for Origin. I mean, we all know that they've been looking at it for months now. It's just a matter of getting that final sort of documentation sorted. They're hoping to have it done in mid-March, so that kind of gives us another week or so. But I mean, if we see InvoCare this week, if Origin moves to this next stage, I mean, what do you guys think? Do you think deals are coming back?
Well, look, I think the way the aviation market is, the Virgin IPO will probably go ahead. So, and usually it takes one big deal to open the market up again. Investors regain confidence. So, I reckon some bullish signs are there for sure, Anthony.
I'm a no, Anthony. I spoke to the JP Morgan CFO, Jeremy Barnum, this week. And just coming back to that jobs data, his point was that until we have some stability around rates, I mean, they don't have to come down, but they just have to stop moving, because it's impossible for a company to put a valuation on itself or to value another business that they might want to take over. So I think Origin and InvoCare are the exceptions to the rules. What do you reckon, Anthony? You're in the Street Talk column for a few more weeks. You expecting a bit more action on your way out?
Oh, there's plenty of stuff out there. There's no doubt about that. I mean, every year starts with a long list of contenders, and then it's just about waiting, like you said, waiting for the market to settle down a little bit. So, like, there's plenty of work being done preparing for things. If boards just get a little bit of signs that things are stabilising, that's when we'll see them hit the market.
Yeah, and I think if you, James, I checked the stocks with the 52-week lows, and three of them that really stand out to me were Magellan, Lendlease, and Domino's. So, some of these are at 3, 5, 10-year lows. These stocks are potentially going to be in the eyes of acquirers.
Yeah, nice one, Tony. Good research. Love it. All right, we love questions from our listeners here at the Chanticleer podcast, and we've got a great one from Jen. She says, "Hi, gentlemen, a big fan of the podcast, been listening for about 6 months now religiously. I've recently got my life together, increased my income from $80,000 to $155,000, bought my own place but didn't overspend. And once the place is set up in 2 or 3 months, I'm keen to turn my spending into savings. In the meantime, I think it'd be a good idea to educate myself on the world of finance, to understand financial markets as well as how to invest. What would you recommend I do, read, listen to start the journey to prepare for the savings period I have coming up? I'm keen to build a nice fat portfolio over the years in order not just to be comfortable, but to actually build wealth. Thanks, and keep up the brilliant work on the podcast." Well, thanks, Jen. Great question. Anthony, Tony, what would your recommendations be?
Yeah, look, I'll jump in there, James. A couple of books. The Shareplicity by Danielle Acuya. Now, she was a former institutional banker who's sort of transformed herself into a journalist, and a good one at that. So it's basically a guide to the share market. The other one is a book called Get Started Investing by Alec Renahan and Bryce Lesky from the fast-growing podcast company that I happen to own a small amount of shares in, called Equity Mates. And those guys are really pitching a message to younger Australians to, get involved in the market and see all the interesting growth opportunities that you might be walking, down the street or past Woolies and realise, how good this enterprise is, and you can put your own money into it.
Yeah, sound advice there, Tony, and don't forget to read the Financial Review. But also just have a think about your mortgage and what it looks like. There could be a few rate rises coming up, and it sounds like you're just starting out, so your repayments might be a little bit hefty. So it's worth to factor in some increases. Yeah,
good call. I'm gonna go the obvious, Jen. Get a copy of The Barefoot Investor. It's sold so many copies for a reason. It is a very accessible, simple to understand guide to sort of setting up your financial life. I reckon you'll be able to skip a few chapters because you've already done some really smart things by increasing your income and getting into the property sector, but it will give you some good tips on how to get on the investment journey. Things like getting into index funds, building your savings, making sure you've got appropriate insurance and protection in there as well. So, yeah, there's a reason it sold a lot of copies. It's a great sort of starting place. All right. Well, any other recommendations we've got out there, guys, for our audience to listen to or enjoy? Tony, anything from you?
Oh, look, I've just been watching the cricket this week, James. I haven't really turned my mind to other financial matters apart from our summit. And, that's certainly been great to see, Usman Khawaja get a ton. And actually to have the Prime Minister at the cricket in India, in that wonderful sort of whatever you call it. What was that vehicle they were in? But
I don't know. It was like a Modi-mobile, maybe we'll call it. I'm not sure. What about you, Anthony?
Tony mentioned before about this fund manager called John Sevior that retired, and he was the sort of top of the pops in Australian investing for probably the past 30 years. And him bowing out actually got me thinking about there's a bit of change going on in funds management at the moment. A few of these older, highly experienced stock pickers are sort of hanging up their boots. And there was a really good podcast that Chris Cortis from Elliston did 6 months ago on Livewire in September. And I went back and listened to that, and I thought, if you take aside what's happening in the market at that exact moment and just listen to what he says about capital allocation, management teams, balance sheets, it was just absolutely rich with how just getting into the head of how these guys think.
Yeah, great idea. My one is completely left field. This is a long weekend down in Melbourne, and we've got a festival on called Moomba. And there is a ridiculous thing that they do at Moomba called the Birdman Rally, where people jump off a platform suspended above the Yarra River in a cobbled together craft and see how far they can fly, quote unquote. And I've got a mate doing it this week, and he's a listener to our podcast, Michael Duffy. He's raising money for his daughter who has a rare neurological condition. So he's jumping into the Yarra to raise money for her school and to support other families who are living with this condition as well. So I'll be heading out there. I reckon the Birdman Rally will get a bit of footage on social media and the news. So if you want to see some clowns try and fly, look out for Michael. He's going to be dressed up as a wedge-tail eagle, Webber the Wedgie. You can search on Google and you'll find the GoFundMe page that he's raising money through. But I can't wait for this. It's going to be absolutely ridiculous and good viewing, so keep an eye out for it. Now, as you might know, we are only a few weeks away from Tony's official retirement show on March 31. Now, I do emphasise it won't be the last we hear from him. We'll definitely be finding ways to get him back on the podcast. But we do want to ask you to help us mark the occasion by recording a special message for Tony. Simply use your voice recorder on your smartphone to record a short message, save that little audio clip, and then send it to chanticleer@afr.com. Be sure to include your name and where you're sending your message from too. We'll be putting a special package together on our March 31 show, and we'd love to have your contributions. Tony, thank you very much. It's been a massive week with the summit and great work.
Thanks, James, and great to spend a bit of time with Anthony on the airwaves.
Yeah, it's been super being here. Thanks for having me.
Terrific. Thanks, guys, and we'll see you next week. If you like the podcast and you want to hear more, consider rating and reviewing us, as it helps others find us. And follow us wherever you get your podcasts. At The Financial Review, we investigate the big stories about markets, business and power. For more, go to afr.com and you can subscribe to The Financial Review, the daily habit of successful people, at afr.com/subscribe. Chanticleer was hosted by me, James Thomson, Tony Boyd and Anthony Macdonald. And it was produced and edited by Lap Fan and Alex Gow. Our theme is by Alex Gow. The executive producer is Fiona Buffini. This podcast is sponsored by PGIM.
The Australian Financial Review.